When most people think of trading, they picture charts, indicators, price action, and news. But the real battlefield, it's your own mind. Your biggest enemy as a trader isn't the market, it's fear, it's greed, it's doubt, and unless you learn to master your psychology, you'll keep making the same mistakes again and again, no matter how good your strategy is. So, in this video, we're revealing the 5 most important trading psychology secrets every trader must master. These are the habits and mindsets of profitable, consistent traders. Miss these and you'll stay stuck in the cycle of inconsistency. Secret 1. Emotional discipline is more important than technical analysis. You can have the best trading system in the world, but if you panic when a trade goes against you, or you get greedy when a trade goes in your favor, you'll still lose money. Emotional discipline is the foundation of all profitable trading. This means following your rules even when it feels uncomfortable. Accepting that losses are part of the game, not doubling your position just to make back a loss. And walking away when you're too emotional to trade. A disciplined trader survives bad trades and thrives in good ones. An undisciplined trader blows up their account fast. Secret 2. Detach from the outcome. One of the deadliest psychological traps traders fall into is getting emotionally attached to the result of a single trade. They say things like, "I have to win this one. This trade must go my way. I just can't afford another loss." This mindset causes overtrading, chasing losses, and breaking your rules. But here's the truth, you can't control the outcome of any single trade. What you can control is your process. Professional traders focus on making good decisions, not winning every trade. So detach emotionally from the outcome. Don't measure your success by profit or loss on one trade. Measure it by whether you followed your system with discipline. Secret 3. Conquer fear and greed. Fear and greed are the 2 most powerful emotions in trading, and both can destroy your account if you're not careful. Fear leads to exiting winning trades too early, avoiding good setups, hesitating at entry points. Greed leads to over-leveraging, chasing the market, holding on too long and turning winners into losers. So how do you conquer them? You build a system and follow it like a robot. You use risk management to limit how much you lose and define clear take-profit levels so you don't get greedy. Secret 4. Accept that losses are part of the game. Here's something many beginners don't understand. Even the best traders in the world lose trades regularly. You might have a 60% win rate and still be a millionaire trader. The key is not avoiding losses, it's managing them. Every loss is just a cost of doing business. As long as your losses are controlled and your winners are bigger, you'll win in the long run. Stop beating yourself up over losses. Instead, ask, did I follow my plan? Was my setup valid? Did I control my risk? If yes, then you did the right thing, even if you lost. Secret 5. Build a bulletproof trading routine. Most traders fail because they trade randomly based on emotion or impulse. But successful traders treat it like a business. They have a routine, a structure, a system. Here's what a winning trader's routine looks like. Pre-market prep. Review key news, analyze charts, identify trade zones. During trading, stick to planned setups, follow risk management, document trades. Post-market review, go over entries and exits, journal emotions, improve plan. This kind of structured routine builds confidence, consistency, and helps eliminate psychological errors over time. Without a routine, you're gambling. With one, you're operating like a pro. If this video helped you understand trading psychology better, hit that like button, comment below, and subscribe for more no-nonsense trading content. Stay sharp, trade smart, and always protect your capital. Disclaimer: this content is for informational and educational purposes only and should not be construed as financial advice. Always do your own research before making any investment or trading.